Thank you. Certainly, I'd like to endorse the comments of the Mayor this morning, and as an A grouper and according to my wife, part-time resident of Broken Hill, I too would like to welcome you to my hometown and encourage you to spend big. I suspect that during this conference you'll hear a lot about the sexy side of the mining industry. You'll hear about the thrill of the chase that exploration provides, and also the satisfaction that can be had from constructing and operating a successful and hopefully profitable operation. But today I want to talk to you about the other end of the mining cycle. I want to talk to you about the transition to closure and exit. I'll briefly outline a model for the sustainability of communities after the honeymoon period of operations has come to an end. The model I want to discuss is very flexible and one that could be applied to any enterprise. Now, this might be a mine, could be a smelter, could even be a biscuit factory, where the enterprise has made the difficult decision to cease operations and to exit its host community. In many cases, this exit by the business is exiting a community that has been dependent upon that business for its very economic foundation. The exit decision and the consequences of that decision have a significant impact on all of the stakeholders. Has an impact, as I know from experience, on management, on employees, and it has a significant impact on the host community. The Broken Hill Community Foundation model is one that has been developed and successfully tested on the experiences gained in the Broken Hill community during times of depressed metal prices and the subsequent mine closures. It's probably appropriate to note that although the model has been developed to provide a sustainable future for Broken Hill, the line of Loyd continues to surprise, and after 130 years of extraction has given birth again to the Phoenix. The Loyd today supports another 2 mining operations in Perilia and CBH Resources' Broken Hill operations. Now, this is a fairly remarkable feat, one that's rarely achieved in mining game and unique to very few ore bodies around the world. Although these companies continue to increase their reserves and are optimistic and confident about their future, they, like their predecessor Pasminco, have identified the finite nature of their business. As such, they are major contributors to and supporters of the Broken Hill Community Foundation model. So how did this model come about? Well, this model came about in 1996 when Pasminco was the only remaining major mining company on the Broken Hill ore body. The company was very mindful of the effect on employees and community when the major employer exits a community. That company, Pasminco, had experienced the implications of significant downsizing and closure in a number of its Australian and international operations in previous years. As such, based on those experiences, the company embarked on a partnership with the Broken Hill community to effect the final and most difficult stage of mining, the exit or the transition process to exit. Importantly, the exit transition strategy that was put in place was implemented while the company was in still full production. The company established the Broken Hill Community Foundation model whereby the community could be assisted in the transition to surviving that inevitable exit from the community. So in order to create a legacy to the community and assist the community post-Pasminco, the company provided seed funding of $500,000 to establish a structure to assist in attracting and creating future employment in Broken Hill and its surrounding areas. The company also provided an additional $125,000 for administration of the proposed fund. This additional money set up things like establishment of the legal entity, appointment of a board of directors, the establishment of a small office, and also funded a part-time administrative marketing role. So what is the model? The model is based on traditional structure of community foundations. The money that is invested, the capital fund, is protected, and only the interest earned is contributed to selected projects. Our particular model, the Broken Hill Community Foundation model, makes a targeted approach to funding and distributing money with an emphasis on an economic development and job creation. The advantages of the model is that it can bypass red tape that often bogs down government funding. It can fast-track access to funding for approved businesses and community ventures. And the model is flexible enough and it can be adapted to suit the specific needs of any community, and it can, as it does in Broken Hill, also provide a philanthropic role within the community. The key factors in support of the Broken Hill Community Foundation model are that the model has been tested now and proven over a period of 10 years. The extensive trial period has proven the potential of this model for companies to support their communities during operations and as a long-term strategy to exit. The foundation model has attracted interest from government at all three levels, federal, state and local. And in addition to government, and most importantly, the model has attracted support from individuals and businesses within the affected community. The model is recognised for its design to assist local organisations, and they in turn are now supporting the model, recognising the value and the need for ongoing sustainability within the community post the mining operation. So how does it work? The capital fund has been invested in a secured managed funds and will remain invested forever. So when a donation is made to the capital fund, that donation continues to work for the community in perpetuity. It's only the interest generated by the capital fund that is distributed to the various applicants to funding. So we as a board have wanted to recognise the financial supporters that we have of the foundation. And we've created a 5-tier recognition structure. It works on the basis of a gold member, silver member, zinc member, friends of the foundation. Typically these levels might vary from a $10 individual donation to $250,000 company donation to the foundation. Some companies may choose to make a $5,000 per year contribution to the fund over a number of years or over a 5-year period. Examples of individuals that have made significant contributions to the Broken Hill Community Foundation would be, and I'm sure they don't mind me mentioning, is people like John Ralph, the former director and CEO of Rio Tinto. And local business have also supported us with a well-known local identity in Gary Radford, also making significant contributions to the fund to help with the long-term sustainability of the community post the mining phase. Corporate supporters such as the current mine operators, Perilia, BMAX and CBH's Broken Hill operations. The City Council have also made a contribution to the foundation, and along with the local community credit union. All have made contributions to seek alternate employment opportunities, again for the community post-mining. These businesses contribute to the fund alongside with the Construction, Forestry, Mining and Energy Union, the CFMEU. Now, I've spent 35 years in industrial relations all around the world, so I'm well qualified to say, well, they probably make strange bed partners. But the fact is, it is a really good indication of all of the stakeholders that are involved when a mining company exits its host community. So how does it work? Applications are accepted from individuals, businesses or groups to help establish their businesses so that they can provide ongoing employment. We get requests for business startup funding. We get business expansions with a view to increasing the number of employees. We can provide interest-free loans, and we can give quick access to bridging funding where the bureaucracy of government sometimes take too long. And as I said earlier, we also provide a philanthropic role within that host community. In terms of governance, the fund has set up a board and it exists on, and it complies actually of honorary directors. Now these directors are typically business people from the host community or people with an interest in that community. It's the board's responsibility to manage the investment of the capital funds and to also distribute the income to new business opportunities and social initiatives. The board's also responsible for ensuring that the foundation complies with all of the Commonwealth and state government legislation. Interesting to note, no directors' fees are paid, and directors provide their time and expertise free of charge. So how do we sustain a model like this going forward? The way in which we've approached it here at the Broken Hill Community Foundation is that we have initially approached associated industries. Now these are industries such as the mining industry, previous mining operators on the Broken Hill line of Loyd, and previous suppliers to those operators who have benefited from the Broken Hill ore body. These previous and current operators such as Rio Tinto have recognised their history and that this community's contribution to their success as mining companies, and are now making financial contributions to the fund in return. I know the board's chairman is putting a significant amount of time into his discussions with BHP, and he lives in hope that there will be some recognition from that company of its history with the Broken Hill ore body. As I mentioned earlier, we've had significant contributions from high wealth individuals as the Broken Hill mining industry has thrown up many successful operators over its many years, and an example might be that the speaker, I think, that follows me after lunch is also a former A grouper in Ian Smith. The involvement and contribution of local business is also important in its recognition. The fund is not a charity. It's not just based on companies. And it's very important, and it has been recognised, that communities have to also take responsibility for their future. As such, individuals have contributed to the fund and local organisations have contributed to the fund. We have had fundraising dinners in Melbourne that have been extremely successful, fundraising dinners in Adelaide. As you would imagine, there are quite a number of Broken Hill residents that both reside in Melbourne and other capital cities around Australia. We also had a great Broken Hill family picnic day in Adelaide. Now this great Broken Hill family picnic day was a resounding social success. Huge numbers of people turned up. But in terms of a fundraiser, it was probably a fairly dismal performance. But again, one of the experiences that the foundation and its board have learnt over the 10 years of our life. We're currently putting in place or structuring a bequest program so that people, residents, can make bequests to the fund, and that money would then go into the capital fund and continue to operate in the community in perpetuity. So what's the next stage for us as a foundation? The next objective of the board is to build the capital fund to an interim level of $2 million. Now, depending on the level of interest rates, a capital fund of this size, we believe, can contribute back to the community between $100,000 and $200,000 every year to assist new businesses in perpetuity. Now, that's an amount of money that could go back into any community that would make a significant contribution to attracting alternate employment that can sustain the community post the mining phase. The Broken Hill Community Foundation model has currently built the capital fund to more than $1.3 million, and we have contributed over our time more than $350,000 back into the community. That $350,000 has been distributed to more than 90 businesses and social organisations and social projects. So as a model, it's tried and tested. It's been tested with the exit of employers, and it's been tested with the employer and the community in partnership. The important thing is it's been set up and continues to operate while the mining operation is in progress. So it provides that access to the community for the miner, but it also provides that exit strategy going forward post-mining. It's a model that can be applied to any community and in any industry with a finite life. On that note, the chairman of the board has spent a lot of time, and the chairman being Vince Gauzy, who you might remember was the former CEO of Mount Isa Mines and current director of Newcrest. He spent a lot of time sharing the model, sharing that experiences with mining companies. And the board is more than open to share its structure with any mining company that sees the need to work with the community during its operating life, but also provide a transition to exit from that community. So in closing, I suppose the directors would be remiss of me, and they would remind me that if I didn't make the comment that any contributions or any funding to the model would be greatly appreciated, and you can leave your cheques with the foundation, the table in the marquee. But in terms of my experiences of 35 years in the industry, it's a model that is well worth considering. It's a model that has been tried and tested here in Broken Hill, and it is a model that provides an interaction between the employer and the community and provides a seamless transition for that employer during the exit process. Thank you.
Thanks very much, Paul. The next speaker in this session will be Kelvin Wiggins from Global Scene.
Thank you, Bruce. Good morning, ladies and gentlemen. My name's Kelvin Wiggins, and I'm from a company called Global Scene Environmental Solutions. Global Scene specialise in energy, carbon and fuel. Our prime business is putting in fuel and energy solutions that power your sites and complement that with carbon reduction strategies. I'm not here today to talk to you about that, but it does relate to it. I've got a background in mining. I used to work in Kalgoorlie for a couple of years. Back in '97, some people here may remember a couple of guys went missing overnight, and we were out in the bush for the night, had a car accident, and presumed, well, the two of us thought we were pretty much gone, and we were lucky enough for a truck driver to find us. I walked out of there with a broken pelvis and ruptured spleen and ribs and shattered a few other things in the body. Why I'm bringing this up is because at this particular time it caused a change in the industry, a forced change that people weren't expecting, one that cost operations money because they had to focus on things other than what they actually did. So what I'm doing is relating to reporting. For the purpose of the next 10 minutes, I just want you to replace the word reporting with opportunity. And I just want to ask everybody who has an understanding on who needs to report, what they need to report and when they need to report it in their operation. Whether you're an investor, you run the operation, you're a shareholder, it's important that you know whether or not your investments or your operations are reporting for obligation and compliance. What I want to talk to you about today is the National Greenhouse and Energy Reporting. And what's associated with that. So you're looking at greenhouse gas emissions, which is included, energy produced and energy consumed. That falls under this Act. And there are thresholds that trigger this, whether or not you have to report. And I know that a lot of people aren't aware, because I'm dealing with a couple of instances at the moment that we are trying to get people through on time before penalties occur. For a corporation, which might be multiple facilities, you're looking at, I'll put a dollar value here so you can relate to it a bit easier, but you're looking at $4 million worth of gas per annum, $8.9 million worth of electricity, and $5.7 million worth of diesel. That's for a corporation, so you might have multiple facilities running under your corporation. If you're a single facility, those numbers are halved. So if you're burning 2 million litres of diesel and $1 million worth of electricity, you've triggered the threshold. So any combination of these could put you up to 200 terajoules, which is what triggers you when you have to report. Now, you're reporting your data. You need the correct data in there. So if you've got incorrect data, you're basically operating off information that's not accurate, obviously. But for automation, if you've got real-time monitoring, you've got watertight operations, and your automation, you've got to automate your data collection. So if you've got a leaking boat, I'd want to find out today, not in a month's time when a manual report comes in. So if Joe decides to put his reporting off for another month, you've got operations that are burning costs out the back end where you could have stopped it on the day. So, it's all about efficiency and managing risk. So what you need to do is first, you need to define whether or not you're a facility or a corporation, because different calculation methods apply, which is very important, because it's very costly exercise if you're not up to speed with this. And then you've got your reliability of data, and you've just got to do your appropriate due diligence. The cost of it, $220K direct to the CEO, if these obligations aren't met. So if you don't know about this or you haven't looked at it, then you need to, if you're the CEO, I would want to know whether or not my team has covered this. For every day that you're over, it's another $11,000 a day. So this reporting is due in, you need to register by August, and it's due in by October 30, and every day after that, $11K a day on top of your $220,000. So if you don't visit this or realise it until April next year, you're running the gauntlet with some heavy costs of $77,000 a week. So it's all about being proactive instead of reactive, I guess, because reactive is very costly exercise. 3 months after the accident, I was spent in the Kalgoorlie hospital learning to walk again and getting the body back into shape. So it's 3 months I was down, unproductive. 3 months for an operation or an investment that's down, loss of production, loss of profit, 3 months is a long time, a very long time, and an expensive, very expensive exercise. Times are changing in business, there's new complications coming in all the time with sites, investments, reporting, so you've just got to keep up to speed with it. So, like I said, people look at reporting as a burden or an extra cost, when it's not actually. It's a good time to review your data, make sure that it's bulletproof. You've got a good, you can do some great analysis on your data, which you already have anyway, so you may as well use it. It's a good time when you're reporting to look at process improvements, ways to improve the bottom line, use good initiatives. I know people say, oh look, we run a tight ship here, there's not much else we can do, but with a fresh set of eyes and some lateral thinking, you're looking at an extra 6 figures on your P&L at the end of the month sometimes. It's happened over and over again. So you're looking at immediate and significant savings. Carbon, looking at a carbon-constrained environment, it's not a case of if it's going to come in, it's a case of when. It's another new complication that you need to add into your infrastructure and your analysis and your reporting. Because if you get caught out, then it's a costly exercise. So you can use your reporting procedures to do an analysis on this and use it as a positive rather than a negative. I know people look at carbon and think, oh shit, it's a bad thing, but you can actually use it to your benefit. So, like I was saying, while a lot of people see reporting as a burden, it's actually an opportunity to improve your production and refine your operations. And that's where I'll finish off today. If anyone wants to speak about it a bit later on, we are available. Thank you.
Thanks, Kelvin. The next speaker is Nick Sheard from Carpentaria Exploration. Nick's group also has a core shed open in Broken Hill. If you want to go to core shed and see some of their core, go to their booth and they can give you instructions.
Thanks, Bruce. So this morning I'm going to be reporting on behalf of our team. I've got to make two announcements this morning. The first one of which is a really excellent team game again. We won the bloody golf, so that's very important. So you can see a cup in our store, in our shack, little core shed down there, so it was quite good. And I'll make the second announcement in a minute. First of all, we'll have the disclaimer, which I'm sure you've all seen. But Carpentaria has quite a few projects in Eastern Australia, but today I'm just going to talk about our Broken Hill projects. And you can see on the slide on the right-hand side, we have quite a bit of application and granted tenure in and around Broken Hill. But I'm just going to be talking largely about the iron projects. Now, as Andrew said earlier, the Braemar Iron Formation extends quite a way northeast towards Broken Hill. In this regional map, you can see the iron formation, those little red marks going up. On the right-hand side is a magnetic image. And what we've noted is that this dominantly magnetite on the northwest trend there going up towards Broken Hill. But we feel, and we've started to show and prove that to the north, where we've got that red circle, is where there's some hematite and magnetite. So we're getting direct, what we're looking for is possibly direct shipping ore right up north. And I'll talk a little bit about that at the end. So what we're going to announce today is that we've actually finished our pre-feasibility study. And we're very pleased to announce that we believe that gives the opportunity to build a large-scale magnetite project of about 20 million tonnes per year of high-grade concentrate, around about 69.9%. And we're very confident in that figure because we've done over 1,200 Davis tube recovery measurements, and we're very happy with that. We would start the mine at about 5 to 6 million tonnes per annum, giving us a quality and we can use existing transport and port facilities. So whilst we're building up this common infrastructure in the Braemar Iron Alliance is talking about, we will be able to get going before that. The first pit will have about 20-year mine life, and additional pits will create another 50 years on top of that. So this is a long-term operation, so we're very proud of that, and it'll help the district remarkably. The development expenditure for this is about $2.8 billion. It sounds a lot, it is a lot, but we've got good partners who believe they can get that money, so that's very good. The operating cost will be $36 a tonne or $37 a tonne of concentrate, which is very low. And the NPV we get is $2.8 billion, so this is a bloody good project, basically. We've got 21% IRR, and we've worked that out using an iron price of about $103 a tonne, which is pretty low, and we're assuming a exchange rate of about 85 cents, which is a bit different from what it is now, but we believe it will come back. And that's what Macquarie Bank and others tell us. It'll pay itself back in 6.5 years, which is remarkable for an iron project of this size and the amount of capital we're going to have to expend. And this is because it's got a strip ratio of about 0.26 to 1. So even though we're starting off at about 60 metres below the surface, once we've done the pre-strip, we've virtually got no waste. It's got a very low bond work index, which gives us a great faith that the project power costs are going to be extremely low. And so this positive result gives us the confidence to start further development, start further feasibility studies on the Horsens Iron project. And as my friend Ian Plimer, who I believe is far uglier than I, suggested this morning, I had to get that in, Charles Sturt actually named this project it was Horsens Knob. So that was one of the early explorers there. So it's a very good project. It's got a lot of upside. It's got good power. We've got great infrastructure. There's native title's been extinguished. And in that project, we're in a joint venture with BMG. They are really paying for the next phase of work. Importantly, we're going to get some cash from them, but we're going to get a free carried interest to producing 20 million tonnes per annum. So that means Carpentaria will have a 4 million tonne per annum output at the end of the day, which is going to be a really good thing for our shareholders. A couple of pickies. That's what the camp was when we started. It was dry. There was hardly any plant life, but that certainly has changed in the last year. There's bugger all outcrop. There's a little bit, like you can see the top right, so it's really all is a drilling program. And that's the proof for the pudding, not Lisa, but the result there, we actually do get magnetite, so it's great. Last year, we said that they had an exploration target of 6 to 11 billion tonnes. We were very happy to announce our maiden resource in December, and we really are getting about a 1-to-1 conversion rate from exploration target to resource, so we're very confident in our targets. It's a beautiful high-grade con, and it's with a 15.5% DTR throughout the length of the mine, and it's got a cut-off of about 12%. This is a magnetic image where we've got the resource area outlined in yellow for the starter pit. It's about 2.5 kilometres long, and that's where our resource was defined. If we go to the grade tonnage curve, we've put a cut-off of 12% on this, and I think that's very conservative. The pit would be showing that area, then that flat area there. But if we took the cut-off down to 10, we'd have another 300 million tonnes of iron there. So it's going to be arguable where we take our cut-off. But others are reporting 10%, and I think we could probably go to that. But we've done all our feasibility work on assuming a 12%. So this figure on the left is just to show that we did an awful lot of exploration before we went into resource. We did quite a number of holes on all the magnetic targets, and the average of this thing, we're getting a depth 40 to 130 metres to some of these targets, but the diamond drilling, we've taken about 726 metres of the core and averaged it out, and we're actually getting about a 16.7% over every one of those magnetic anomalies. So we're very confident that our exploration target, and that's beyond the current resource, is another 5 to 9 billion tonnes. And I'd bet Ian Plimer's right ball that it's going to be the bigger one. If he's got any left, anyway. It's going to be it's a very thick ore body, but we're going to mine it down to about 490 metres. As I said, a pretty low strip ratio, but because of its width, it's going to make it very easy to mine. Now, the processing flow is very simple. It's very conventional. We'll be starting off with a primary, secondary crushing, going to an HBGR, high-pressure grind circuit, through to the rougher mag separator, which will send some stuff, or hopefully a lot of the stuff, to the tailings dam, but importantly to the grinding classification circuit, and then go on to the ultra-fines, through to the finisher, the mag, and then we'll just have a concentrator wash and and filtering. So it's a very simple circuit. If I can get the next slide up. There we go. It's got a lot of advantages, as I said before, good infrastructure. We can use existing rail and port, and it's a very large resource. And because of the low power requirements, it's going to be very easy. And one of the things we've just done is done a pellet production test, and we got a premium product out of that. And there's some examples of that in our stand that you can have a look at our pellets. So, in conjunction with the other guys from the Braemar Iron Alliance, we're suggesting that in the long run we'll have a conceptual corridor that will be shared down to a port that we want about 100 million tonnes. It's be south of Pirrie, but getting it out to deep water. So that's very important, so we get Cape-sized vessels there. So it really is a good project. To the north, we've got about 1,500 square K of project where we're getting direct, where we hopefully be getting direct shipping ore and more magnetite. So we've got a lot more to do there. And we get there. We believe we're going to add significant value, and I'm sure Winston's happy with all this. It's going to make a really significant contribution to the Broken Hill mining place. So, car material, we've got a lot on our plate. We're going to aim to start this BFS very soon. We've got iron up near McDougall's and Tarawanggi. We've got a tungsten resource at Yanko Glen, which we're going to increase very soon. We've got existing nickel targets at Coonabarry, which we're going to drill. We're waiting gold assays for holes we've just drilled in central New South Wales. And we've got other gold targets to drill there, and we've got our partners drilling as well. And at Hewenden, we got coal. So thank you very much.
Well done, Nick. Good to see the life of Broken Hill is continuing. Next presenter is Stephen Dennis, and Stephen is with CBH Resources, and everyone knows that CBH is very present in town here, hoping to commission a mine next year. Thanks, Stephen.
Good morning, ladies and gentlemen, and thank you very much. Unlike Nick, we don't have a disclaimer. We're a private company, so we can say whatever we want. Thank you very much for the opportunity to present to you today. We don't have many outings being a private company, so we're very, very pleased to be here. In terms of CBH today, it's a lot simpler than what it used to be. We are a significant producer of silver, lead, zinc in the country. We're a subsidiary now of Toho Zinc of Japan. I'll talk a little bit about Toho in a moment, and that follows a takeover offer that was made last year. We do have an underground operation at Endeavour, which is the old Allura mine, and we are building a very important new mine here in Broken Hill called RASP. All of our product from Endeavour, at the moment, the lead goes to Port Pirrie, owned by NiStar, of course, and our zinc concentrate goes to Toho in Japan. All of the lead and zinc concentrates from RASP will go to Toho, so it will go to Asia. And we own a shiploading facility in Newcastle. A little bit about the takeover. I guess it's fair to say Toho were pushed to the takeover by NiStar. They at the time had 25% of CBH, wasn't enough to hold the tide back, and NiStar forced Toho to declare its hand. That resulted in a full takeover offer being made. Since then, business as usual, really. There's been no senior management changes, thank goodness. The CBH comprises a board of Toho nominees and myself. We also managed to keep one of our directors, Ian Clymer, and he spoke to us earlier today, of course. We almost lost Ian last year. For Christmas we bought him an inconvenient truth, and I thought that when we did that, that was the end of Ian, but not quite. In terms of Toho, I'll be very quick with Toho. They've obviously had some major problems of late. The big waves have rolled in. You can see Sendai there on the screen. They own 4 operations. The one that was damaged is Onahama, where they operate a zinc roaster. But they are diversified producers of non-ferrous metals in Japan, very big part of the Japanese smelting industry, and for CBH it represents a degree of vertical integration for that company. In terms of CBH strategy, quite simple now. It's to deliver consistent production from Endeavour and also to develop RASP. I won't go through all of the asset divestments which you can see there on the screen. There are many. Interestingly, a number of the companies presenting here today have as their cornerstone assets that came out of CBH. So there has been a lot of asset rationalisation over the last 2 or 3 years. One or two of those assets I have to say I wouldn't mind having back, but I'll be diplomatic and not point out which ones they are. In terms of Endeavour, this is an aerial shot of Endeavour. The mine, as I mentioned before, used to be called Allura. It's been going since 1983. CBH acquired it in 2003. There's an underground mine there, of course. It's accessible by decline and haulage shaft. We operate a mill and flotation circuit, and there's a lot of infrastructure there, including rail. One of the things that CBH put in was a paste filling plant, which of course gives us access to a lot of voids and opens up a number of mining areas. The metrics for 2011, that's calendar year there. We are running the mine at 720,000 now. We think we've got it about right. Fairly high grades, 12% plus combined lead zinc. And you can see the zinc concentrate number and the lead concentrate numbers there. We have a very strong operating team, Disco Sildersic, Tony Davis and Denver D'Angelo. Not bad blokes, even though they support Collingwood. 190 employees, and we've done a lot of good work on our operating costs, somewhere around 58 to 60 cents. 3 years ago, that used to be sitting up around about $1 C1 US per pound, so we've made significant improvement on the operating costs. Shot of the resources and reserves, you can see the numbers there. The resources are at a 3.6 combined cut-off. We're actually looking at those reserves and resources at the moment. We think it's fair to say that we're somewhere around 5 to 7 years of mine life there to go. And we are, however, putting in a significant effort to exploration in and around the mine. But around about 5 to 7 years, you can see a reference to a potential open cut at the top there. Conceptual at best at the moment, a lot of work to go into that, but that's a prospect for the future. Okay, RASP, the flagship. You can see where we are today. You are here, and you can see outlined in red there a thing called CML7, which we own. Runs around about 4 kilometres from the south, where you can see Parilia's operations. To the north, up where the Parilia people have their north mine, and you can see in the middle there the Kintor open pit, beneath which we've put in a 2.5 kilometre decline. 2 years ago, you'll remember we tried to put CBH and Parilia together, and I guess when you look at this map, the logic sticks out for that transaction, but unfortunately it takes two to tango, and our friends at Parilia decided they couldn't quite see the same logic that we could see. In terms of the RASP project, it's been approved. It was approved in February by the New South Wales Government. Construction is underway. It's being built by Gress Engineering. It'll have a mine life well north of 15 years. It'll operate around 60,000 to 50,000 tonnes per annum. And you can see the concentrate numbers there, a big producer of silver. And that silver will go as a credit to the operating costs, and we will have very low operating costs as a result of silver. Capital cost around $155 million, and it will be financed internally through Toho, and that means we won't be dealing with any of those nasty bankers. In terms of what's going on here, reserves and resources. The plan is to mine RASP on an integrated basis, the western mineralisation there, and beneath it the centenary mineralisation. They're the two primary ore bodies we're chasing, and we'll be mining remnant material from those main lode areas there. You can see them running through CML7, so it's an integrated mining strategy. There's a huge amount of potential left in those main lode pillars. I think there's about 1 million tonnes that we've taken into reserve at the moment. That's about 20% of what's there, so there is a huge amount of upside in those pillars. Out to the north there in green, the tailing storage facility, and in purple, that's where we have started building our processing plant. Mentioned briefly the integrated mining strategy. You can see there the pillar ore on the right, and then the Ras mine beneath that looking north. It's a long section, I should have said, and on the left is the western mineralisation itself, and the decline is already down about 2.5 kilometres. We're currently extending that another kilometre. The development plan is there. Really all I want to say about that is that we do expect to be commissioning this mine early next year. We should be in production around about April. As we stand here today, the plant's about 16% complete. I guess it's fair to say CBH, or Consolidated Broken Hill as it was first named, was the vision of Ian Plimer, Bob Besley and Jim Wall. I know Ian's here today, and I think hopefully Jim and Bob are. And so it's great to see that RASP is about to become a reality. I mentioned the ship loader. We export concentrates for those 4 mines, which you can see there. We have a 30-year lease, and all our concentrates will go through there. So the development of RASP, it's a big moment for us. It will see CBH and Toho emerge as a globally significant producer of lead and zinc. We've got a great team of dedicated people. We're well backed by Toho, and I guess with a second mine, at long last, we'll become a significant producer. Last thing I'd like to do is to take the opportunity today to thank the people of Broken Hill. We went through an approvals process. We got a lot of support here, and I'd also like to particularly acknowledge the support we received from Winston Kai, the Mayor, and also John Williams, the federal member for Murray-Darling. It was a complicated process, and it was great to have their support. So thank you very much, ladies and gentlemen, and thank you for listening to us today.
Thank you, Stephen. Next we have Paul Loyd, who's the chairman of Beacon Minerals.
Thanks, Bruce.
Thanks, Paul.
And, good morning, everyone. In 10 minutes, I'd like to tell you the story of Beacon Minerals and try to beat Catherine's little bell. And I think I can do that because we've got a fairly simple company with an exciting, advancing gold project in Western Australia. There's a standard disclaimer. We are a public company, so we need to show you that. If you want to read it, you can come past the booth later on. Nothing exciting. The company overview. I'm the chairman of the company. The managing director is Darryl Harris, and he should be up here today, but unfortunately hurt himself in a yachting accident. He decided to take on a professional crew on a trip from Fremantle to Bali, broke 6 ribs, damaged his spleen, and damaged one of his lungs. So he's recuperating it back in Perth. And another one of our directors, Matthew Egan, is a drilling contractor, and Lyle Thorne is our consulting geologist. He's here today, and he'll be on the booth if you'd like to come past and say hello. As I said, we're ASX listed. We're listed in 2006. We're reasonably well funded. We've got cash in the bank, and we've got an investment in Consolidated Tin, which is the code is CSD. We've got a very good tin project in Queensland. The issued shares are 995 million. It's the result of the GFC, but we kept the company around, so it was a positive thing, and we're continuing to develop our project. We've got a market cap of about 13.5 million at 1.4 cents, so it's a little bit of a trader stock at the moment. One second. There we go. So, as I said, we've got an exciting gold project. We're single project focused. The project is in Western Australia. We have a small experienced management team, and we're aggressively exploring the Bali Gold Project. There are some toll treatment opportunities for the project, but there are not many mills in the general area. but there's also some regional acquisitions to be had. Okay, this slide gives you the location of the project, and it's basically 220 k's north of Southern Cross. It's an area that isn't well explored because it has transported cover, so when the old-time explorers went there, they didn't find any outcropping to help them with their exploration. Be patient. There you go. So the Barley regional overview, we have 400 square kilometres of area there, ground, and the middle tenement is 80% owned, where the gold mineralisation has been found, and the balance is 100% owned. It's a lightly explored area because of the location, and we have done some shallow drilling. It's early days for this project, but it is a very high-grade project. A lot of the drilling we've done has been less than 100 metres in depth, which is not deep drilling at all. But we have found shallow, high-grade gold drill results, and we do have a base resource of 74,000 ounces. Lift it up. Okay, thank you. This slide gives you an idea of the mines and historical mines, I suppose, in the area. To the north there you see Lord Henry, which is an existing mine that's just recently been shut down by Torrey Resources, and that's about 220 k's away. So, and then further down towards the south there's some existing projects. Most of those are sort of BIF-hosted projects, a little bit different to ours. Haley's East is and Phil are the mineralised zones that we've found. We targeted those when we initially started the exploration, because this project was one of the projects that we listed on back in 2006. It was very early days for us then, and we've done a number of drill programs and obtained very good results on every program. So as I said before, the JORC-compliant resource is inferred. It's 74,000 ounces at 6 grams a tonne. And it's very shallow, so obviously very profitable to mine if we can increase that JORC-compliant resource. We've recently done an RC drilling program at Haley's East to increase the JORC-compliant resource and firm it up potentially from inferred to indicated. We've also commenced a feasibility study completing on the mining operation, because we've just recently been granted a mining lease over the mineralised zone. And so we're now commencing native title and other issues. So as I said before, it's a shallow, high-grade mineralised area, and we've done metallurgical test work which confirmed that there's 96% recovery from a standard CIL treatment plant, and the cash costs there back in December 2010, and they're obviously very low at $382, and I think that would have gone up a little bit because the cost of everything are increasing, but as you can tell with the current gold price, there's a healthy margin in that treatment. We've been granted this 12 square kilometres of mining lease, and before we do any toll treatment, we'll obviously have to go through that whole process of obtaining a mining licence. As you can see there at the bottom, we've obviously hit some very high-grade mineralised areas, the 27 metres at 36, 14 at 45, 13 at 13. So, and we continue every program, we get these sort of results. That might be a little bit hard to see, but it gives you an idea of the area that we've drilled, the Haley's East area, which is subject to the mining lease. And as I said, there's very high grade, continuous mineralised area. This is a cross-section. Gives you some idea of the technical people. There's the 27 metres at 36, and it's a bit hard to read, I suppose, for you guys, but if you want to come past the booth and talk to Lyle, he'll give you a detailed description of the technical side of things. So the exploration, this year we finished in April a drilling program, 5,000 metres of RC drilling, 7,500 metres of air core drilling, more on the regional side of things. and we did 2,000 soil samples. We're still waiting on some of those results. In fact, we made an announcement today to the ASX of further high-grade hits around the Haleys East and an extension to the existing known mineralised area. We also flew a high-resolution aeromagnetic survey recently, 9,000 line kilometres in January. And in fact, the pilot flew at 30 metres off the deck, which was pretty surprising. So given there's some pretty large trees out on the property, so it would have been interesting to see. But he didn't have any accidents, and we got our results, so we're happy with that. And that aeromagnetic survey did come up with 13 high-priority targets that are still to be evaluated in the next drilling program. And the ongoing drilling program, this project is at an early stage, it's high grade, it's very exciting, and we just need to keep drilling it to increase the JORC compliant resource. So it will be RC drilling in the next few months on those identified targets. I didn't beat the bell. So I'll quickly move through. So next 12 months, we'll complete the mining proposal for potential processing via toll treatment at nearby mills. We'll continue the regional exploration and try to increase the resource base to that 250,000 ounces, and then we could justify doing a feasibility of relocating a second-hand plant of our own. And we will also evaluate at the same time toll treatment opportunities in the area and also look for regional acquisitions. Thanks very much.
Thanks, Paul. Our next speaker is Chris Torrey from Silver City Minerals, another Broken Hill story. Thanks, Chris.
Excuse me. Silver City Minerals takes its name from the famous Silver City of Broken Hill. We are very much a focused mineral explorer, and that's what we are. We don't have any resources. We're a mineral explorer that's very, very focused around the city of Broken Hill, and we use the geology of what was known about the famous ore body to go out there in the surrounding countryside to look at these rocks. Now, we have a variety of projects of which you can come to our booth, booth 17, talk to about us later on. But what we're going to do is sort of just give you a snapshot of what we're looking at and what we're doing. Now, we're not a listed company, so I don't actually need this up here, but our prospectus has just come out. You're welcome to come by and grab one at our booth later on. We're trying to raise about $10 million to go out and hit this, the belts of rock around Broken Hill quite hard. The company was incorporated in 2008, so it's been around for a while. And during that time, it raised about $3 million in seed capital, of which about $2 million has gone into the ground in mineral exploration activities. The tenure has been acquired from our colleagues at CBH through joint ventures, our colleagues at Golden Cross Resources through joint ventures, and also from a bunch of properties that PlatSearch had. And PlatSearch now owns about 30% of the company prior to going to IPO. So what we've got in the district is an area of a large unexplored area. There's about 1,700 square kilometres out there. We think is significantly underexplored in terms of a small mineral explorer. The history of the Broken Hill district has been one of large explorers, and they have explored for typically large ore bodies, 30, 40, 50 million tonnes, and their exploration style reflects that. We believe the way to go, what we're going to do is look at a lot more detail in some of these belts to find sort of a smaller ore bodies. Now, we have 19 advanced projects and 6 are drill ready. In fact, we have 8 permitted drill ready projects to go and drill the minute the float gets away. The basis behind this, you can see there's a little red line which is a symbolic representation of the Broken Hill line of load. The fleshy pink zone on that diagram is actually the group of mining leases that are controlled by Perillia and CBH. And our tenure is in the purple, which kind of surrounds that area. The little red dots are areas that we're going to go out and hit straight away. We have secure title, we can get in on the ground straight away. The infrastructure around Broken Hill is fabulous. Most of our projects are within 50, 60 kilometres of town. And this is the question everyone asks, well, you know, where does one look for elephants? Well, the answer, of course, everyone knows, is elephant country. And Broken Hill, by anyone's standard, is a supergiant. Now, this diagram here shows you, in terms of lead grade and lead production, that it sits out there amongst the very super giants. Now, the people of Broken Hill, they know about the history of this place, but there are other folks that you've got to appreciate this. Now, even a small percentage of the size of Broken Hill, which is about 300 million tonnes, a small percentage of that would be an excellent result if we could find something like that. So where do you look for baby elephants? It's still elephant country. One of the really interesting things, of course, is that this is Australia's premier silver districts. In fact, before Broken Hill was found, as Ian alluded to this morning, the Thackeringa-style veins were the things that actually attracted the miners to the district. So there were silver veins in the district before Broken Hill was actually found. It's a great number, billion ounces. It's actually probably more than that. This is another driver behind what's happening in what we're trying to do in the Silver City, is the silver price has gone mad. In the last 8 years, it's gone from about $4.50 to $45, and in the last sort of 12 months, it's become it's going through the roof. So we're not really sure where silver's going, but it's an interesting driver behind what we're trying to do. Now, in terms of the team we've got here, you know, we've already heard these names mentioned. Bob Besley, who's probably in the audience there, Bob's had 40-odd years' experience in mineral exploration. He was actually brought up in Broken Hill. He was one of the founding directors behind CBH, and he's now involved with Kimberley Metals, and he's a strong driver behind what we're doing. Myself, I'm a geologist. I've been involved in the silver industry in North America and Latin America for the last half a dozen years. You all know Ian. Ian gave the lead into what we were talking about this morning. Ian's been involved in Broken Hill since the 60s. Now, Greg Jones is the managing director of PlatSearch, which is a major shareholder in Silver City, and Greg has been involved with senior positions in Western Mining and Sino Gold. This is what the shear structure currently looks like. There are about 49 million existing shears out, and prior to us going to float last week, we had about 60 shareholders. We hope to raise another $10 million by issuing another 50 million shares. Our total share structure will be sitting at around 99 million. Back to this diagram again. I'm just going to talk about some of those red dots there. If you zoom in on some of the tenure that we have, the New South Wales Geological Survey have mapped in some detail the geology of the district and the styles of mineralisations that already exist in the district. And one of those styles is called the Broken Hill type. That means the rocks are the same as the style that you find in Broken Hill, that has the same type of mineralisation. And you notice those are in 3 belts. There's one belt to the south, which is called the Native Dog, or a Little Broken Hill Trend. There's the Broken Hill Trend, which goes over the mining leases themselves. And there's a big trend, a big folded trend that comes around through our tenements, out the big folded sequence of mineralisation and lode rocks. If you just draw your attention to a thing here called the Razorback West prospect, which is kind of just north of Broken Hill, you notice there's no red dot there. There's no red dot there because, by and large, Razorback West is covered by alluvium. But we'll focus a little bit more on Razorback West, which is one of the styles of the mineralisation we're looking at, the Broken Hills type mineralisation, which is lead, zinc, silver mineralisation. You can see this is another zoom in, and the rocks are folded around, and we look at Razorback West there. Razorback West is a major geochemical anomaly. It's a lead zinc geochemical anomaly. Undercover, it's about 4 kilometres long, just north of the Broken Hill line of Loyd. And I say to people, well, we don't know what that is. It's a RAB anomaly. It's undercover. It's 4 kilometres long. It's a large geochemical anomaly just north of one of the world's largest geochemical anomalies. Never had a drill hole in it, so we're going to go and look at that. Another style of mineralisation, the original Thackeringis vein styles of mineralisation. We have 10 kilometres of anomalous lead and silver in the Apollyon Valley area, for example. That diagram shows you the total amount of mineral exploration, just some soil samples, some rock chip samples, never a drill hole drilled there, yet the silver grades are very high, in the order of 1,000 to 9,000 ppm from old workings there. Yet there is no systematic exploration ever been done there. There is no drilling in the southern part of that tenure. We actually have mineralisation in this area. We have a thing called Maybell, which has an intersection of 4 metres of 608 grams silver. 608 grams silver probably relates to, or equivalent to, about 4 metres of maybe in the order of 20, right now, with the silver price it is, 20 grams gold. We don't have significant drilling around there. There's a lot of silver anomalism in that district at Maybell. That's the sort of thing that we can go looking for, high-grade silver veins. And just as a sort of final, why would you invest in Silver City? We are very focused. We're very focused on this consolidated tenure position around Broken Hill. We've got rejuvenated interest in the district. We've got potential for high-grade base metals and silver veins, and we've got that experienced team. Thanks very much.
Thanks, Chris. Our next speaker is Steve O'Day from Bathurst Resources.
Thanks very much, ladies and gentlemen. I'd just like to give you a brief overview of Bathurst and our development plans, starting with our disclaimer, which naturally is a listed company. Bathurst Resources is dual listed. We're listed on the New Zealand Stock Exchange as well as the ASX. Conveniently, stock code is BTU, and we're a coal company. We're focused on developing a project called the Buller Coal Project, which is on the west coast of the South Island of New Zealand, just north of a town called Westport. Our objective is to be a mid-tier coal producer by Q4 2011, which I'm sure you all realise is not far off. The Buller project is a high-quality metallurgical coal project, and it's in New Zealand's premier coal district. We have a pipeline of brownfield and advanced exploration projects in the area, and there is rail, port and power infrastructure already in place. Developments to date are that we initially acquired an option over the project, which then allowed us to complete a definitive feasibility study, which we did. And based on that, we went out to the markets, and with a rights issue and placement, we raised the funds to acquire the project. Did that in about September last year. Later in the year, around October, we entered into our first offtake agreement, guaranteeing our income once we get the project into production. A week or so ago, we entered into a non-binding heads of agreement for a second offtake agreement, so our future is looking very positive at this time. This is an overview looking northeast from Westport, showing where the project is. The project is the light green area, and it extends for approximately 35 kilometres from just north of Westport to Seddonville on the Mokanui River. You can see the red line is the rail line, yellow line is the highway, and they all end up at Westport, but the red line, the rail also crosses New Zealand across to Christchurch, to their port at Lyttelton. We're focusing on the centre of that project, where you can see the red circle and the brown oval. The red circle is escarpment, which is our first project. We have a mining permit in place. That's what we completed our definitive feasibility study on. That was then extended with the Deep Creek study, which will feed into that project. The blue line is the slurry transport pipeline, which is how we will get the coal off the plateau. As you can see from the image, we'll be working on a plateau which is approximately 600 metres above the coastal plain, and there is no simple road or rail drop-off to get the coal down. So we have proposed a coal pipeline which will enable us to get coal from our wash plant to a dewatering facility right adjacent to the rail line. That brings me to the logistics. We have the mine feeding a wash plant on the plateau, an 11-kilometre slurry pipeline to a stockpile at Fairdown, adjacent to the railway line. Coal can then either be rail freighted directly to Westport, which is about 11 kilometres, which is a river port, and then on to 10,000 tonne ships for transshipment up to the North Island, to New Plymouth, which is the photograph in the bottom left. New Plymouth is a Panamax capable port. The alternative is to rail freight the coal directly across New Zealand to Christchurch, to their port Lyttelton, which is also Panamax capable. It's about 380 kilometres from our project. At this point, due to restrictions on the rail line, our preferred option is to use Westport, which is of course using our local port, local infrastructure, and the local community are very much behind our project. Resources-wise, we have a 72.8 million tonne JORC resource spread over a number of different deposits. We have an exploration potential of a further 55 to 94 million tonnes, which gives us a potential total resource of 125 to 167 million tonnes. Of that resource, we have upgraded two projects to reserve status, and they are Escarpment and Deep Creek. Total reserves are 12.5 million tonnes, which will wash down to approximately 10.2 million tonnes once through the CPP. Some of that material actually will bypass the CPP as direct shipping quality. In addition to that 12.5 million tonnes, there's a further 2.1 million tonnes of coal within the Escarpment mine plan. However, it can't be considered a reserve because it's old workings and so is only inferred under JORC, but we will be processing that and expect that to generate about 1.4 million product tonnes. The coal quality that we'll be getting from production at Escarpment is exceptional quality. It's a very high-grade metallurgical coal. Its key attributes are an extremely high fluidity, low ash, low sulphur, and very good ash chemistry. All of these features in a coal make it ideal as a blending coal for coke manufacturers and producers. So a small amount of this can significantly upgrade a more average coal to produce a good coke. Our development plan is based on the Buller project, which is part of the Brunner coal measures. Much of this coal is in thick seams, 4 to 6 metres, up to 10 metres in some areas, and overburden is around 20 to 60 metres. So it's open castable, and the majority of it. Our program for this financial year is to further extend the resources through our exploration program to develop and demonstrate our 125 to 167 million tonne target, and additionally complete a 36-hole program in a recent acquisition, a Brookdale project. In the financial year 12, we'll be looking at bringing Escarpment into production, which is 100% hard coking coal, for the first 5 years, starting at 650,000 tonnes per annum as initial production and ramping up to 1 million tonnes production. That production will be increased to 2 million tonnes a year once Deep Creek comes online. Sorry, I'm just conscious of time. Licensing is well advanced. There's a number of processes you need to go through in New Zealand. We have got our mining permit, our exploration permit's been extended, our OIO, which is the same as the FIRB in Australia, has granted approval. Access agreements are ongoing and come up for a hearing in about 2 weeks' time, and that process takes about 3 weeks. So we'll go through that, and then we expect to be able to be in production. But like all environmental hearings, nothing is set in stone or known in advance. So we've done what we can. We believe we've got a very good chance. Economically, operating costs, $100 to start with, dropping to $84 a tonne, $88 a tonne. Market is currently in excess of $300 a tonne. So it's a good product to be in. I won't go through much of this time. One of the great benefits of the project is that we've got significant partners who have committed to offtake. The offtake agreements that we've got are both commitments to buy the product as well as supply debt finance for development of the project and further acquisition funds. As well as the offtake agreements, which we have one with StemCore and a second with CITIC Resources, is that we retain a percentage of our sales that we can sell into the spot market where we can take opportunities as they present themselves, but we have guaranteed sales for the majority of our coal, which gives us the best of both worlds, we believe, from a marketing perspective. Recently, we acquired 2 projects nearby, Brookdale, which is the dark green, and Eastern Resources, which is the olive green. You can see there within our light green area, the yellow is the other company in the area, which is Solid Energy, which is the local state-owned resource. And I've run out of time. My apologies. Thank you very much for listening. I hope you enjoy the rest of the presentation.
Thanks, Steve. Next we have Kent Anson from L&M Energy, and this is the final talk for this session. Thanks, Kent.
Yeah, thanks for that. I realise I am the final speaker before lunch, so if bear with me for a few moments, we'll roll through this fairly quickly. Like Bathurst Resources, we're a New Zealand-focused company. We're dual listed as well on the NZX and ASX. Market cap around $100 million. We also have a dual focus in our exploration strategy. We're looking at both conventional hydrocarbons and unconventional, and namely on the unconventional side, coal seam gas. We do have some excellent acreage at the moment, all well located. By that I mean nearby infrastructure, markets, and also proven gas fields. We currently have New Zealand's first certified reserves on the CSG side, or coal seam gas side, of 274 petajoules. That was upgraded last year by about 60% from 173. Also, again, our CSG portfolio, which is mainly on the South Island, or is wholly on the South Island, is extremely well located in Southland, which is a bit of an energy sink for the country. We're fully funded through this year, and we're carrying nil debt. On the map there, you can see on the yellow, it's a little bit small, but it's that's the main hold of our conventional assets in the Taranaki. On the South Island, the orange and red is where our coal seam gas assets are held. On the conventional side, we have 4 permits, one on the south, which is a hybrid permit. It contains both conventional and unconventional hydrocarbons, and 3 on the North Island. Onshore, up the top there in the small yellow block, is our Kahili permit. That was awarded towards the end of last year after a fairly hotly contested bidding process. There's an excellent opportunity there for some early cash flow. There are existing facilities on that site. It's been home to gas production in the past. In essence, the previous operator essentially drilled in the wrong spot Didn't put any science to it. We're doing a lot of science at the moment. We're acquiring seismic, approximately 30 kilometres, but we're also reprocessing 160 kilometres of seismic. And for a block that's 6 square kilometres, that's a lot of science. Moving offshore, we have Kahiru. We're a 15% holding there with our partner Rock Oil. It's a large play, 45 million plus of barrels of oil there. And it's also close to an existing field, the Kupe field, for those of you who don't know the Taranaki. Moving back onshore, we have our Alton permit, which is one of our larger plays there. There's a lot of prospects within that permit. Initially, we're targeting a shallow oil prospect within Alton. We're looking at drilling a well there mid-year. It's around 2 million barrels of oil recoverable, and it's around 1,500 metres deep, so it's not that deep at all. On the coal seam gas side, we have 3 permits. On the eastern side of the country there in Otago, just south of Dunedin, we have our Kaitangata permit. It's around 1,100 square kilometres. That's subject to an appraisal extension at the moment, and we're looking at doing some further resource evaluation work later this year, if not early next year. Moving over to the west or western southland, just about 80 kilometres north of Invercargill there, or northwest, that's where our core CSG portfolio is held, and that's where those reserves are held as well, within that central 220 permit. We're currently conducting a pilot project within that 220 permit, where we're looking at moving those 3P reserves into a 2P category. The 274, just putting that into perspective, if we're able to convert all of that into a 2P category, that would be one of the largest onshore gas fields in New Zealand. So there's a lot of gas within that permit, and also a lot of upside, which I'll talk about in the next slide. 226, which is the adjoining permit, we know a lot of the coals extend out into that permit. Basically, it's a case of drilling that resource up and certifying more reserves. One point I've got there, just on the 220 permit, or the region for that matter, is the first mover advantage. That could really be sole mover advantage. Within Southland in particular, we're the only ones that are doing drilling. We're the only ones with reserves, and we also have an offtake agreement, initial offtake agreement for our pilot gas with New Zealand aluminium smelters, which are located at Bluff, about 100 kilometres away. They're New Zealand's largest energy user, Elkin owned, and it's great to see them throw their support behind the project, which is a local project. A little bit more detail, our CSG play in Western Southland. 220 you see there, that's where our reserves are held. The way the reserve process works in coal seam gas, gas contents come into play quite a bit. Currently, we focused initially, all our data is biased towards the shallow coals, which have a lower gas content. We're still yet to certify, we still did certify quite a significant resource because of the extreme thicknesses through the area. But there's a lot of upside within 220 as we extend down to the south and the coals get deeper, tapping into that richer high gas content coals. Also, you see a lot of upside potential out to the west into that 226 permit, or the YR permit. There's a lot of coal out there. Basically, it's a case of drilling up, proving up resource. We've done some seismic work out to the west. We're very encouraged by the potential out there, and as you can see aerially, there's a lot of upside as well. And as I mentioned, we just started a 2P reserves program, a little pilot project, which is in the central part of 220, as we're looking to try and prove up the resource, move it from a 3P category to a 2P category. The pilot itself is fairly centrally located within the 220 permit. I'm not sure if you can see very well on that slide there. It's around 1,100 metres away from existing infrastructure or the power grid. That's where we'll be putting in a small power station, tapping into that grid and sending electrons down to the smelter, which is about 100 kilometres away. The whole point of the pilot, again, move reserves through from one to the other, but really the essence of that is to determine a gas production profile for the Morley coals which we're targeting. We're also refining the completion method which we're using, and also defining a development template for the area, and that'll all feed into the 2P reserves. This project itself, as I mentioned, is around 80 kilometres away from Invercargill. That's not a huge distance in terms of gas projects or gas plays. As you might be aware, in Queensland, a lot of the coal seam gas fields are located hundreds, if not thousands of kilometres away from market. We're quite local. There's a lot of markets within this region, within the Southland region generally. One question on the North Island, it's generally a given in terms of gas markets. There's a lot of infrastructure there. That's where all the hydrocarbons are found to date and where they've been producing. So I thought I'd focus on the South Island. But as a case of point on the North Island, where all the 2P reserves are, just for your interest, there's around 2,000 petajoules of 2P reserves on the North Island, and they're consuming around 190 petajoules per annum. So as you can tell, in about 10 years' time, the North Island may run out of gas unless there's additional reserves found. So it's a great place to find gas, and it's an exceptional market, exceptional conditions in terms of pricing as well. But on the South Island, a lot of people think that there isn't a market for gas, particularly in Southland. That's not true. There's a huge market for gas in the South Island, namely Southland. There's a lot of industry, whether it be dairy plants, abattoirs, and also the smelter, which we've initiated or executed our first take-off agreement. We're also looking at moving down the value chain, displacing LPG, heavy fuel oil, and also there's a lot of lignite use on the South Island, so there's potential for coal displacement. Mid last year, the country brought in their ETS, or carbon tax, and that's only providing more incentive for companies to look at gas as an alternate fuel. So quickly, in summary, we're dual-focused, have an excellent acreage position, and also of excellent quality. As I mentioned, it's near infrastructure, markets, and also proven gas fields. We have some excellent near-term cash flow opportunities with the Kahili on the North Island, and also on the South Island with our pilot project, selling electrons to the smelter there, and also we have our reserves in place. On the CSG side, there's some excellent high-value offtake opportunities as well, as we're looking for that heavy fuel oil LPG displacement, where you're getting the high oil parity type pricing. And as of note, that's some CSG being flared at within the Ojai field. Thank you. There's a disclaimer. And also we have a booth outside, so if anyone has any questions, please stop by and hopefully answer them.